Hello everyone, my name's John Locke and I'd like to welcome you to The Winning Trade. But first, the required disclaimer. This presentation is given for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial, and please make sure you are aware of all your risks prior to placing any trades. Also note that this presentation includes hypothetical computer simulated trades and results. They're believed to be as accurately represented as possible, but keep in mind that live results can vary from simulated results for many, many different reasons. If this is your first experience with us, my name's John Locke. I'm a trading performance and success coach with Lock in Your Success LLC, where myself and my team help traders win in life and in the market as well. And today I'm here to guide you into the realm of high probability income trading. Now in a moment, not now but in a moment, we will be going over the winning trade. But before we do, let me quickly explain what I mean by an income or high probability trading strategy. An income strategy is where we put ourselves in a position to generate profits through the passage of time rather than depending solely on price movement to go in the right direction. Meaning we can often make money whether the price goes up, down, or sideways. Now this doesn't mean we're going to win all the time, but it does mean that the probabilities of us winning are much better than they would be otherwise. Now if you find yourself wanting more information as you're following along, simply contact us at lockinyoursuccess.com. That's L-O-C-K-E, inyoursuccess.com, or ask a question in the comments on this video and we can direct you to where you can find more information. So let's move on. The winning trade we're looking at today is called an X4 version 22, or V22 for short. The version 22 is one of three primary trading structures within our X4 training system, and it's designed to maximize results in neutral to bearish conditions. Now the V22 is a bit more active and more complex than some of the other strategies you may have seen here before. However, it's also the highest returning rule-based strategy within the X4 program itself. Now the V22 is what I would call an extremely dynamic, market-neutral income strategy, and we trade this on the SPX. Now the strategy itself requires a minimum capital of $3,500 per trade. And the example size that we're going to be covering today is going to be $35,000. Now this strategy does not have a profit target. However, there are times when we will exit when we don't feel we're going to do any better. And we'll see that as we move along in our example today. But although we don't have a profit target in general, I'd expect an average good month to be around a 10% return. And our exit loss trigger on this strategy is going to be 7.1% of what we call planned capital. And that in our example is going to be $2,500. Okay, so this is what an X4 version 22 looks like upon entry. The way that it works is we enter our trade when the options cycle is 77 days to expiration. So if we come over here, you can see that our May 15, 2020 options are 77 days to expiration. And what we're going to do is we're going to put on a butterfly with the short strikes about 20 points behind the market. So in this case here, the last price of the market is 28.96. So I'm coming down to my 28.70. So that's about 26 points behind the market, and then that's fine. And the wing width on this is going to vary. Essentially what we're trying to do is we're trying to widen our wings enough to get $35,000 into the position when we actually buy our call. So the actual delta of this position on entry is generally going to be very, very neutral, but the exact configuration is going to vary. So some months we might have 50-point wings, some months we might have 70, 80, 90, 100 plus point wings, and then we're just going to correct that with the call. I'm going to make sure we're under $35,000. Now that is the typical entry. That would be what we call a typical entry for this strategy. However, we have had some minor rule changes lately, and the reason has been to deal with the environment we've had. If we take a look at the price chart at this time, this is sort of in the middle of our little market crash we just had lately. And we are dealing with record price moves from on a point basis from day to day. And we're also dealing with record implied volatility skew curves that we've never seen before. And when we see things we've never seen before, sometimes it makes sense to make some modifications to the strategy. Now, these were modifications that were made real time as we track them on our options trading for income webinars that we do on Monday mornings where we track these trades. And that also highlights the importance of the continued support that we give on the options trading for income Monday morning webinars as well, because you're going to have these programs or these trading strategies that had possibly worked well in the past, and then of course as the future comes along, a lot of times we're dealing with things that have never happened before in the market. Therefore, you have no backtesting ability to go back and verify what to do about it. However, we do know what to do about it. And one of the reasons we actually know what to do when a trading strategy might start becoming problematic because of a new market environment is something that we do is we look towards our other trading strategies sometimes. And what happened here is I know a trading strategy that happens to work absolutely fantastic in crashing markets and extremely volatile positions, and that strategy is referred to as a modified rock position within the rock strategy. And all we did here is when we started noticing that the initial structure of the trade was starting to have challenges with the extent of the price movement in the markets, even though we didn't have any historical backtests that we could go back on, we did have that modified rock position, and we just took the lessons we learned from the modified rock position, we applied them to the version 22, and now all of a sudden the strategy is doing perfectly fine in this environment. And this here was kind of mid-modification of some of the rules, and I'll kind of talk about those as we go along. And since then, we've also added a couple of other aspects of things. But one of the things we're doing is we're limiting our wing width. Normally, when we would enter this, we try to get 35,000 in this because 35,000 is our planned capital. But you can see here, we only have less than $10,000 in the position. Now, the reality is, and again, something we've learned from the rock strategy in the modified rock position, is that when the price movements start to get really wild and implied volatility picks up, what we actually want to do is we want to narrow the position down, which is completely opposite of what most people think. Most people think, well, if we're getting more price movement, we got to widen the wings. But that's not the case. It can be the case if the price movement starts to get slightly larger. So in other words, if we're usually running an average true range in the SPX of 20 and it goes to 40 or 50, then yeah, widening the wings might be a benefit to you. But when it goes up to 100, 200, 100, 250, you start getting moves like that in the index, you're actually better off to come back down and go narrow and to start doing some really low delta calls. And that's what we did here. Obviously, when we entered this, if you look at the price charts, you can see we're in a very hostile environment for a neutral trade. Because in most neutral trades, we're trying to contain the price more or less within a certain range, and this price is not about to be contained. So that being the case, we don't plan on it being contained. We plan on it blowing outside the position. So this here is what we entered as an entry position. What I did is instead of going super wide with this thing, we limited our wing width to 90 points. And we've actually added this back into the back end of the program. I did a little bit of a lesson on this earlier. We narrowed this down to 90 points, keeping our capital low, keeping ourselves in a fairly low delta call, in this case about 13. And this is how we decided to trade this. Now, as we go along, you're going to find out this is a very active trade, but it's also a profitable trade, so it's certainly worth being in the market. But it's going to be moving around a lot. Realize that in most conditions, you don't move around anywhere nearly what we're going to be doing with this. It's just that the market is just so crazy. And again, we're attempting to be in a neutral position. So this is what we need to do to adapt in this particular case. So as we go here, and I'm just going to go to the very next day. Well, actually, let's just take a look at this day. The market has been down 82 points. Our implied volatility is very, very high. You can see the price range of the day. It's here from 29.54 all the way down to 28.56. So about a 100-point range during the day back and forth. If we go to the following day, we get an 83-point up move. Now this is going to put us what we call outside our tent. And that being the case, in a normal position, we would first try to correct it this way and see if we can get our numbers to come in line. Of course, this wouldn't work here, but even if it would work, we wouldn't want to be doing that today. We wouldn't want to be doing that in this type of environment, because if we're doing that, we're making the assumption the market's probably going to keep going up. And we know that the market's just been choppy coming into this point. So we wouldn't want to do that from a rules standpoint. We just want to take this and we would just basically move it. So we're going to pull this off at 27.80. We can see that our last price was 3,038. So we're going to come in at 3,020. And we're going to move this butterfly up here, back into here, and I believe I kept the 90-point wings. I did. We keep the 90-point wings. And did we have to make a call change? Yeah, and we move the call as well to get our delta where it's supposed to be. And here again, we're looking at about +2 delta. We usually run around somewhere around in the 0 range. Usually if we're running deep out of the money calls, we tend to keep our delta maybe a little bit more towards the positive. So going to the next day, 68-point down move. Nothing to do. Following day, 115-point up move. And again, we're outside the tent. Now, this is one of those spots normally where we might try to roll in the upper long. But again, given the volatility of the market, we don't even want to try that. Best off to just come in here and roll the position up. And we make the roll. Let me see if we're still 90 points. Here we're slightly negative delta. Like I said, we're not trying to, +1, -1, +2, -2. It doesn't matter a whole lot. But we are touch negative at this point, and that's fine. And let's move on. So here we go to the following day, and we're down 107 points. Now, one of the things that we're no longer doing on this would be to, especially in this environment, would be to actually roll it at this point. We now, with the newest rule set in heavy environmental, we're going to leave this alone, and we're just going to correct the delta here by being outside the tent. We want to be a little bit towards the negative delta side. So nowadays, we'd be moving something like that and maintaining this position. Here, I did not do that because we weren't doing that yet. So, and the reason I can do that is because there's really not any risk to the downside. Look, if this goes down another 200 points tomorrow, it's not the end of the world here. We don't have a whole lot of risk. There's really not a reason to do a whole lot here. So we're going towards a little bit more hands-free when we don't need to make the adjustments because we don't have a risk problem. But anyway, we do make the adjustment here. We're doing the same thing. We're taking the position back down to about 20 points under the market, and we are maintaining at this point our 90-point wings. And let's go to the next move here. Okay, the market drops another 80 points. Had we not moved the position before, we would have moved it now. But that said, if I was in this position, in the position I'm in now, there's really no reason to do this, even though the original rule set says to roll your position back when you get under the short strikes. It's simply not necessary here. It's completely not necessary. But we're going to do that. I'm going to roll this back. And again, 20 points below the money. Again, 90-point wings, which is our maximum wing width that we're allowing on this. And there's our call. It's about 9 delta in this case, where our delta is pretty much flat. Go to the following day. We get hit with a 204-point move to the downside. And we're way outside the tent here, so we probably would make an adjustment here, even under the new guidelines. We're going to take this and roll this back to 27.50, and that's almost 20 points under our short strikes here. We are still maintaining our 90-point wides, and That is our position going forward. Our delta, again, we just flatten our delta with our call. We move it if we need to get somewhere, in either direction, 0 to 2 in either direction. Let's move forward here. 92-point up move. Again, we are not looking for making a minor delta adjustment here. We are just going to completely take the butterfly off and roll it if we run into a problem, which is again what we're doing here. Notice as we're trading here and the market was going down, we have been making money, and also notice that the actual capital in the position starts coming out. This is one of the benefits of this type of position on the X4 version 22. When we start to get really big down moves in the marketplace, capital tends to come out of the position and it tends to gain money, and that can work out really well in our back and forth markets. So anyway, what we're going to do here is we're just going to roll this forward. So the same thing, we took the position off and we moved it up to about 20 points below the money. And our new position is going to look like that. Now, when I did push this up, I started to reduce my wing size. So one of the things I can do, especially if I'm up a decent amount of money, remember this had a $35,000 planned capital. The maximum amount we actually had in the trade was less than $10,000. We're up close to 50% of our total capital we had at risk in the position at any time, which is nice. And our goal at this point isn't necessarily to maximize income at this point. It's to maybe be a little bit more profit protective and see if we can make any more. So we, in this case, we roll the wings down to 80 points. That takes a little bit of capital out of the trade. Of course, we adjust our call, so our delta is relatively neutral, right? This is about +1, which is almost 0. And if we look at our price chart, this is essentially what we've gone through here. Big market moves, but you can see there's more to come. So let's take a look here and go to the next day. Drop 137 points. Nothing necessarily that has to be done here from a risk standpoint. And like I said, we might be interested in, leaving this position. It's not, in this particular case, it's not necessary to roll it, but the guidelines do say to roll it. So we're going to roll back. This is our new position. Our delta is pretty much zeroed out here. I maintained our 80-point wings, and our delta is flat. Then we get a 234-point down move. That's just a gigantic move. And this being the case, being way outside the tent as we are, then we would once again roll this back. So let's take a roll back here. We're putting the short strikes about 20 points under the money, in this case about 26. And we've reduced our wing size to 70. So as the profit's coming up, we're taking our wing size down, and you can see the total risk in the position now is much less. So let's move to the following day. Get a bit of a bounce. Then we drop 281. Insane, right? Very big market move. And that being the case, we're going to roll this back. And again, I probably would leave this nowadays with the newest rule set we have. But at this point, we would be rolling it back. I think we would have been better off had we actually left it alone. But we're going to roll this back to 2410. So we're going to take this position off here, bring it down to 2410. Neutralize our delta here, so we're just about 0 with our call. Running a 3 delta call right now. I believe I widen this back out again. See, one of the things that tends to happen is implied volatility really picks up when you get a move that's the record move. This is literally the largest point move the SPX has ever had in a day, by far, and that tends to increase your implied volatility. And when we do that, then a lot of times we can go a little bit wider with our butterflies and still have very flat delta and still be able to maintain a low delta call, which we did here. And again, this is our maximum width. I wouldn't go any wider than this. Moving forward, 106 point up move, following the plan, doing the same thing, taking this off, bringing it up 20 points under the money, 2470. And this is our new position. Following that day down 203. Again, there's not really a reason to do anything here. We don't have hardly any risk to the downside at this point, but we're following the plans here. So I'm going to roll this back, maintaining our 90-point wings. Delta is just about 0. Now we get an up move to the outside of the tent. Profit and loss is up $6,038. Now with the way we're moving this thing around and the very good profit that we have, it's not a bad idea to consider taking it, because as we start to narrow our wings down a little bit more, and if the market continues to fly back and forth like it is now, at some point it's going to be challenging for us to make any more money. In other words, there's only risk on the table. But still think it's worth staying with at this point. So here, again, we're way outside the tent. We put our short strikes just under 17 points under the money. And this is our new position here. Again, delta is pretty much flat. Below the short strikes calls for a rollback. Again, nowadays I probably wouldn't bother with that. But our profit and loss is now 72.16, so we're still gaining, still worth being in. Let's go to the next day. We get outside the tent again, substantially. Our profit's up to 93.23, so we're still seeing profit gains with these moves. In which case, it leads me to believe, geez, I might want to stay in this a little bit longer. So we theoretically should do an adjustment, although I still would argue an adjustment isn't necessary here. Yes, we're outside the tent, but our delta is relatively flat. If anything, I could just move the call to accommodate for a little less delta if I wanted to, but realistically the risk here is minimal, so I wouldn't bother. If I do roll this back, I'm rolling it back to about, it's going to be 2180, it looks like. 2180. We're running 80-point wings, so I dropped the wing size back down. Again, more of a profit protection type of a move. And you can see we have what they call a floating butterfly right now. Now, don't get me wrong, there's still risk in the position. You could go down from 9,000 to maybe 4,000 had you done, if you just sit here and do nothing. But very low risk trade. Certainly at this point, you're not going to be risking any more than you initially started with. So let's move on. 190 up move. That puts us out here. So we're going to do the roll up to probably 2410 would be my guess is where we went. 2410, 70-point wings, 4 delta call. This is our new position here, up 106. So you see this move here kind of hurt us. The moves before were helping us with the way the implied volatility was shifting and everything. Now it's starting to hurt us a little bit. We're down to 87.09. Once the moves start to hurt you, you have to decide when to get out, because you don't want to just diminish your profit away, or necessarily stay in the position if there's really no chance you're making any more money, especially if you're having to make adjustments. But anyway, we're way outside the tent again, so we are going to require an adjustment. That's going to put us at 25. We're at 25.53, so 25.30 we should roll up to here. Let's see where that goes. Let me uncheck. So we're rolling this up to 25.30, and again, about flat delta. This is what we look like. 10, 20, 30, 40, 50, 60, still 70-point wings. Let's move forward. Up 126 points. Again, we are due for, we're getting outside the tent, so I'd probably make another roll on this. So we do the roll up. Again, our delta is flat. We move the call if we need to move the call. to do that. And here's our position here. So what I'd like to do is I'd like to just show you the types of moves we've been through. I mean, we entered the trade way up here. We had a just crazy, crazy down move. And now it's just a really, really huge whipsaw. Okay. A lot of times you get a move like that, it's going to blow a strategy out on the downside. And if it doesn't blow the strategy out on the downside, it's going to pop it on the upside. You can see how well this has been handling it. In fact, this was from the beginning an extremely low risk trade with a very good risk reward ratio. Right? And we still have that now. We have a very good risk reward ratio here, although the moves are starting to beat us up a little bit. So at some point, we're going to want to think about getting out. So here we are with a down move the next day. Up move. So things are settling in a little bit, looks like. Here we had a move, 124-point down move. Again, I wouldn't be adjusting this at this point. There's not really necessary, but by the guidelines, we are supposed to adjust it. So we're going to take this down to 24.40, which is right here. And it's 1, 2, 3, 4. It looks like we're still 70 points wide. And let's move to the next day. Nothing here. Nothing there. Now we get a 148-point up move, which throws us outside the tent. And that's going to require an adjustment. So I'm going to go to, looks like I'd be going to 26.20. So let's see where this goes to. 26.20. 1, 2, 3, 4, 5, dropping it to 50-point wings. Our thoughts here is we want to keep the capital in the position low, and we want to start, pulling out risk in the trade. We're getting closer to expiration. Our gamma is going to start being a problem. Certain volatility shifts in this type of a position are going to start to be a problem. So we're just accounting for that possibility. The other thing here too is, notice that we haven't gained any money in the last 3 or 4 adjustments. This is another indication that, hey, let's just move on because it's not helping us staying in. But let's move on to the next day. We had a relatively large out move, put us outside the tent. So again, we're going to do another roll up. I'm just going to hit the button here. And the same thing, we're going to be, in this case, 25 points under the money on the roll up, 50-point wings, we're keeping it small. Now we're getting another up move here. Again, outside the tent, we're going to roll this up to 27.20. There it is. Keeping it small. Had another up move, 44 points. Profit and loss is still about 7,300, so not bad. But you can see how the dynamics within the market are starting to push against the weaknesses of the strategy rather than being with the strengths of the strategy like it was before. So I am aware of that, and at some point we have to pull the plug on this. We don't have to pull the plug on it, but it might be beneficial so that we can just move on. There's no point sitting here adjusting back and forth if we're not making any money out of it. So let's move forward here. I wouldn't have made this rollback, but the rules do call for a rollback, so we rolled it back. That's one of the things we've changed about this to make it easier to manage. If rather than just going by a price point, we're considering what our actual risk to the downside is before we roll it to the downside. So we'd make that roll there. Get the 81-point up move. We're outside the tent, the same thing, 28.20. We're going to roll that up to there. This is our new position. And we're going to hop out of this at any point here. And here is the position. I just didn't want to make another adjustment on the position. Again, our profit and loss is no longer climbing. As a matter of fact, it's been deteriorating slowly as we've been going along. And all we're doing is we're moving the thing around for no reason. Realistically, we should have gotten out of this earlier, but sometimes you don't know. Like, we could have made. I mean, we've been in these trades before, and we've made another $5,000 or $6,000, and come back with 30-40% wins on our planned capital. That wasn't going to be in the cards in this case because the market just went into this grinding up mode, and it started becoming challenging and pulling down the position. So we're just going to get out of it. Had we stayed in it, I did trade it out staying in it. The result is about the same, except we made a lot more movements. And we would have been out of this trade anyway when July's 77 days to expiration. So we would have been in another multiple days. But anyway, this was an incredible, absolutely incredible price move that we went through. And to go through that price move and get these kind of results, when you think about it, our initial capital, or our maximum capital in the trade was somewhere in the $9,000 range. So at one point we were actually up 100% of that capital, and here we're closing it down at probably close to 90% of a return on our actual capital. But we figure all our returns on our planned capital, and our planned capital in this position was actually $35,000. And when you do that, we end up with a 21% return in 47 days in a market neutral strategy where we were completely non-directional in a market that has record volatility and record point moves. That is incredible. And that is why I love the X4 version 22. This episode's winning trade. If you like what you see, I encourage you to join us and discover how you too can follow along with this and many other great strategies as they unfold during our weekly Options Trading for Income webinars, and where you can also learn about upcoming winning trade presentations, and perhaps best of all, you can get information about our free Trading Performance podcast, where you can learn to become a much more effective trader regardless of the type of trading you do. If you have any questions or comments or anything you'd like to see on the next winning trade, we'd love to hear from you. Simply comment on this video below, and we would also encourage you to come on over to thewinningtrade.com, where you can find past episodes of The Winning Trade as well as a lot of other fantastic bonus information on how you can profit through income trading. And please remember to subscribe and comment on our YouTube channel, where I will personally answer any questions you may have. Thank you, and we'll see you on the next winning trade.